Hey traders, what is going on? Welcome back to another video. In today's video, I got this question over on Instagram and I wanted to go over and get into the details, explain it. Thought it was a really good question, just to understand that we're buying and selling human behavior when we actually look at the charts and we can see certain things. So let's just look into certain of the things that go through my mind, that I think about, that I put into comparison, that I put into the piece of the puzzle before actually taking a trade. And then looking to see how it works out and stuff just like that. So quickly, let me add a few things up to the top. The first thing that I want to go through and explore real quickly is just the emotional scale. The things that we see, the things that we think and feel in trading and in real life. If we just take a look at this picture real quick, let's see if we can make this any bigger. Okay, well, I'm gonna just zoom it in, make it a little clearer, stuff like that. But basically, we have 5 ranges of emotions here. Really just general stuff, but in the center, you have what would be consolidation. Not a lot of stimulation, just average consolidation. Even if you're on the higher time frames or you just see a doji for that matter, that doji represents indecision in the market, an undecided state, whether that's not progressing, whether that's not advancing or it's not decreasing. But here that just stands in the middle ground. And apart from that, we have something that would be a little bit good, the best part of your day or the high of the market. Same thing to the opposite side, you have your worst part of the day. And one thing as well, these spectrums really range, whether they're going to be from the daily time frame, the weekly time frame, the 1 hour, the 5 minutes, whatever you're looking at. But each period of time is going to have their own set of highs and lows and averages, right? So that is something we're going to go through and explore while we're talking about those next. But it's just to understand, we can just break this down really quickly and just draw some in. But we have an idea of a high to a low right here. We have another high to a low, just consolidation areas. In these areas as well, we have the low to the high where we can see price consolidates around there for a bit. Same thing right around here, price consolidates for a bit, price consolidates for a bit right around here. Same thing right around here as well. So in these consolidation areas, we can really be able to see where the average is, where I would say the center of gravity is. There's a lot of price action towards the center of these consolidation areas. We'll pull out our fib, go more into detail in a little. But basically, when you have these consolidation areas, you will start to be able to see more evidently what is a low area. Let me draw that in with something else. A low area and a high area, right? And we know in between there, we have our 50%. Anything above 50% is leading towards the upside. Anything below the 50% is leading towards the downside, right? So we have these on our state of emotions as well, right? This would be neutral. Neutral. Then this will be a little good. And this would be a little bad as we go towards the downside in this uptrend that we're experiencing, right? So anything below this would be terrible, extremely bad. And those would be the type of times that I'm looking for there to be a lot of confusion in the market and easier for me to swap my position. Because one thing that we will look at in a bit when we go over to the 7 Principles of Trading book, we have to understand that there are 2 sides, supply and demand, a buyer and a seller to every move in the market. And apart from that, there are those 2 phases of just consolidating and actually progressing and developing price, where we can actually see in those consolidation areas where a lot of our best opportunities are going to be created. And from there, as the market breaks out of that consolidation, it really just goes on to express itself and lead in the trend and direction for the time. So that's how we can look through our ranges. In this case, we don't pull down to one of their extremes, but we have to stay up to date with all the market structure. There are many different places that you can end up placing your fib, but later on, as we go through and try to break out of this area, we have our high to our low right around here. I have a video back testing this. I'll try to maybe put a video somewhere here, put a link to somewhere here where you can check out that video where we back tested this. But here we even have a swing low to swing high of the most recent structure, come down to the E1 level, bounce right on that center of gravity area of the previous 50% before rising straight to the upside and then going right back into one of those consolidation areas. So apart from that, let me explain one thing. The idea of the composite man. Richard Wyckoff explained this idea or this theory, which is the idea of the composite man. The composite man attracts to the public a stock in which he has already accumulated a sizable line of shares and making many transactions involving in a large number of shares, in effect advertising his stock by creating the appearance of a broad market. Okay, so what we can pull from this and what we can use to better have an idea of the supply and demand that is being distributed and accumulated throughout the market. So we have to just understand, like I mentioned, there's two phases. We're going to go through a consolidation phase, right? Then price will have its and from that consolidation phase, let's think of a person that passes away, their heartbeat is currently flat, and that would be a consolidation. And then as, let's say they're in the hospital and they're being revived, they're being shocked back to life, they would go through some sort of extreme, right, which is the shock that can bring them back to life on that uptrend. So while we look at those consolidation areas, we're looking for that extreme point to be formed. In a case like this, because the trend is going up, we would just look for an extreme to the downside, so some type of support to be broken before price continues back up to the upside, before we'll go back into another consolidation, and we'll just keep going through the cycle of creating and developing of these trends. So apart from that, I want to go through and just draw this in, but you can see from these consolidations, we push, right, consolidate, we have some push, consolidate, we'll have some push, consolidate, push, consolidate, push, consolidate, push, right? We have consolidation right around this area, push, consolidation, push, consolidation, push. Even right around this area, let me just copy this. Even right around this area here, if we are to have a closer look, we basically see our area of support, right? We have multiple areas of support. We can see supports building around these areas. We have our resistance right over here. We have some support here too, and we have support here too, right? So we can see through this whole volatility, we broke through 1, 2, 3, 4 supports temporarily. We broke through 4 supports temporarily. So what goes through my mind and what I can see here is that you have a lot of losers that is being happening, especially during this this very large wick, right? So every buyer that was sitting at this area expecting for price to hold, seeing every reason why price can hold, same thing for this support down here. You might view this as the final low or something of that sort. But it's like we just explained, the market and ourselves, we're going to have those extreme moments where things are a little bit worse than they usually are, or things are a little bit better than they usually are, right? And then you have those averages. We would just have a better understanding of these pushes and then these consolidations, understand that we'll have some type of extreme. It's not that we must, but these things are probable, so there's a chance that we get them. We're looking out for these. We get better risk to rewards, even if we are to place our fib from the swing low to the swing high. We do pull down to our E1 section, place our stop loss towards the low. Stop loss may get pulled depending on the broker, things just like that, but then you do have reason for re-entry. Back to the upside, same thing as of now, as we're already breaking past that high optimism where we would have that normally good, right? And then here we have that extreme good that we are currently experiencing. So we can look to see if price will come back down at least to that 50%, that center of gravity area, before reassessing the situation to see whether price wants to come back up here or at least come back down to the support. Apart from that, let's hop onto another chart and just have an idea of tracking the actual price. So something like this, if you checked out the recent video I dropped over on my personal channel, JD, I go through and I actually just charted this up in the moment while I was doing what I was doing. But basically this is still playing out where we came back up to these extreme areas. We broke through the resistance. Even this, given all the news that's been coming out by the US, this news is just, this bull run is kind of just ridiculous, overextended, and extreme is the point that I'm getting at. So we still had 2 bearish weeks from that video I made, and we're still looking for price to at least continue downward. But let's just be on the lower time frame and be able to look at the market structure a little bit better. So looking from the left here, we have our support that gets broken through, right, before continuing into the upside. We have a resistance that gets broken through, consolidation, and just that experience of indecision. Same thing in and around this area. We just have consolidation before a push, consolidation, and even in this area from our swing low to swing high, we have price coming down to our E1 level or 127 level before further upside movement, right? We get push, consolidation, push, mild consolidation. And keep in mind, all these consolidations are happening on many different time frames. These are not limited to one time frame. You have to choose the time frame that you wish to operate on, given the rate of opportunities that will be produced for you, and is it on a schedule that you can work with. But same thing here, we have our support that gets broken through back to our old area of consolidation. We have a bigger area of consolidation there. Double top of resistance, wrong tool. Resistance gets broken through very, very slightly to a new high, right? Before the downward pressure comes in, breaking through the old support, right? That's been building up more and more before price decided to go back to the upside, break through the resistance again, followed by downward pressure and lower lows to look and see if the downtrend is coming in. One thing as well is that you have to remember these two lines here are from the weekly time frame. So let's just go back real quick. Yeah, these levels are from the weekly time frame. So we know that this is an extreme area in itself. So from the lower time frame, as we're going into that extreme area, we can look and see that this lower low is a downtrend identifier. So we can look for those same things. But pause, let me go over into the PDF and go through and just show this. So basically we have an idea for what the main trend, the general detail of the whole situation is, that it is a downtrend. The best way that I can explain this is that of a river, and that a river goes downstream towards the ocean, whatever, towards the greater area of water. But as it's going downstream, not every drop of water in there is going in the direction that we would anticipate it to go in. Every direction is not going, every drop of water is not going downstream. Some of them get tossed up in the air, some of them end up over the side, some of them end up going down, some of them end up getting trapped in certain areas. So we just have to be aware that our trades are very similar to this. Every trade we take, every opportunity, sometimes we might take a short trade and then we have that bullish run to the upside, right? But this is part of the reason why, to filter out my trades to take better opportunities, I use two time frames at least, higher time frame, and then from my lower time frame where I'm actually executing, we have a very similar situation actually to what we're seeing right here actually, right? Where we break the new high, we see that lower low structure come in, and then we start peaking those old resistances, right? To form those liquidity areas, tapping into those tricky areas where a lot of people are going to say there's fake outs and stuff like that. But basically we have that break here, then we have lower low structure coming back in, so we can at least see that lower low structure is represented by a downtrend. And then apart from that, we see that we start forming resistances, and those resistance will act as the high, the peak high area. So what I would look for is an extreme area, something a little bit better than that before the disbelief comes in and depression comes back in, because we're in an overall downtrend. So every time we start forming those resistances, I look for those resistance to get broken slightly, and always to my fib levels with tight stops, always looking for price to go back down to the main trend essentially. But yeah, we can see that this resistance never comes back and gets hit, but we do form resistances right here. Price comes back up, hits it, right? We get normal developing market structure, that second phase I told you about. Remember, we go through two phases, the consolidation phase and then the progression phase. So even when we start forming the resistance here, right, we end up coming back up to pop into that liquidity area before price shoots back down into that progression phase. So I think that was a really great question to ask. You guys should definitely ask me more questions like this in the comments and over on my Instagram so I can get straight to them. Thank you for tuning in, guys. I'll catch you in the next one. Peace.